recorder up and running and perfect. Good. Sorry about the tech issues real quick. Just had to get my mic set up here. And welcome to the 4:30 p.m. 4:30 p.m. closing bell webinar. Now, obviously, today we have a special guest for us here today, guys. From Diversified Trading Institute, DTI, we have our good friend Tom Busby here with us today. Now, Tom, he goes all the way back to the 1970s as a professional trader here. He's featured in Futures Magazine, Active Trader Magazine. He's from The Money Show, First Business News, CNN. He's all over. So right now, Tom will be presenting us with his webinar today, The Early Sign of Change. So he'll be going over market volatility and a few of his indicators here, showing you, especially going into this year as well, with the volatility within the first month or two going into the year here. He's going to show you his 30 trading insights that he's learned over his several years of experience of trading and showing you how that reacts in today's market. So Tom, let me get a quick sound check. Are you here? All right, guys, give me 1 sec here. We'll get Tom's mic set up in just about 1 second here. All right, guys, give us about 1 second here. I do apologize for the tech issues. We're getting Tom's audio set up right about now.
Are you ready for me to start? Okay, well, thanks, Denise. Thanks, Josh. And thank Fausto and CTU for inviting me here today. First of all, what a day to be here. Market had a unbelievable performance. I hope everybody made a bunch of money. Bunch of money today. It was pretty interesting as it developed, especially the way we started off this year. What I like to do is go through some insights that I've kept up with over the years, might help you. I think the insights are good because they make you think a little bit outside the box and a little bit of things that you learn. And I encourage everybody here to keep a journal with them when they're watching the market, and they might see stuff that you might see more than once in your trading career. So let's get started. And before I do, everybody type in, if you will, what city you're from. What city you're from to let me make sure you can hear me. I saw Madison, Alabama go by. That's around Huntsville, right? I'm from Mobile. Oh, Spring Hill College. All right. Let's get started. First of all, DTI, Diversified Trading Institute, was started in 1996. We've been around a while, and we all know there's risk involved in the market. The key is managing that risk. And what we try to do here is do our trade setups in such a way that we know, at worst case, we'll be able to play again. And so what we try to do is use about $300 per trade, whether it's a stock, whether it's an option, or whether it's a futures. Now, early signs of change and 30 trading insights is today's presentation. A little bit about my background. Established this company in 1996. Former Air Force officer, a member of Chicago, current member of the Chicago Mercantile Exchange. But one of the unique experiences I had was receiving a Globex terminal. There was only 50 of them. It's called ETH program that went outside of Chicago. And that was quite an education, having that terminal way back then, because if you remember, electronic trading was not prevalent like it is today, and I had an early start on electronic trading. Early signs of change. The market this year, it came into the year and looked very weak, and now today's been the strongest day we've had all year. And what does this foretell, and what does this mean? Okay. All right, January 16th had the worst start in history in the market. That meant something. And so if you were following the market at the time, and there's a deal that's written about in the Trader's Almanac, talks about the first 5 days of the year forecast of what happens in January. And the first 5 days obviously forecasted we were going to be down, and down we were. In fact, the market at one point was down over 10% for the year. That's what the first day looked like, and that's what proceeded after that. The market stayed down all the way to about 1,800 on the S&P, and then it rebounded, and that rebound has been going on since 1,800. So we're up right now 177 points off that low. Now, when I'm looking at the market, what I try to do is look at these 7 markets: E-mini, the Dow, the NASDAQ, the DAX, which is a German index, gold, crude, and bonds. If you're looking at those this year, even with today's rally, the E-mini still below the yearly open, the Dow still below its yearly open, the NASDAQ's below its yearly open, the DAX is below its yearly open, gold is positive this year, crude is negative, and bonds are positive this year. If you look at where we're at right here on March the 1st. And that's what that chart depicts, is the big fall and the rally that we've had since that time, and where do we go from here? Dow's in support of that. NASDAQ, DAX, there's gold. I told you it was positive. It's still positive. Crude, negative for the year, and bonds positive for the year. Here's 5 stocks that I follow. All these stocks are negative for the year. Apple, Netflix, Amazon. Now, Amazon had a big day today. We were long Amazon coming into today. We bought more positions in Amazon. Amazon was up $27 today. $27. We were long that stock. That was a great place to be long. Google, we're long that stock also. It had a pretty good day. Tesla is showing signs of reversal. Keep your eye on it. Now, into the 30 insights. These insights were created over the years, and what I'll do is try to explain those as I go through them. And if you got any questions, you can always send me an email at tbuzz55, that's TBUZ 55 @gmail.com. All right, I always record the prices on the first day of the year. And I say it helps you trade the winners. This becomes real important to you when you get to the last quarter of the year. And if I look up here where things were, I have this right behind my computer. I can tell you where the E-mini was on the first day of the year. I can tell you what Netflix was. In fact, it was at 108 on the first day of the year. And you can see it's down substantially since the start of the year. That's an example of keeping track of what's happening in the market. I keep these sheets posted. If you would like a copy of this, send me that email and just say, hey, send me a copy of all the prices of the first day of the year. It's pretty handy, and I'll be glad to send it to you. That's tbuzz55@gmail. All right. When prices are trading their highs, they tend to make higher highs. Today's a classic case of that, isn't it? The E-mini closed today at 1977, and the high of the day was 78.50. It kept making high after high all day long. Now, here's something I always tell people about, especially when we finish the first quarter, but it's not too soon to think about this. The market will reverse its trend after July the 4th. So keep that in mind. That's a trend reversal time period at the halfway point in the year. Always look for that around July the 4th. Now, we all know that trading is very difficult. I try to tell people, continuously try to leave every day with something that you learn. You will find out if you try to take that kind of attitude, a lot of your fear will go away because you're sitting here looking at the bigger picture. And number two, you are improving if you leave with that insight. Now, here's something that a lot of people don't know about, but it's called the DAX. I gave it to you as one of my 7 sisters. You can look at that price at 6 in the morning and put a band around it. Today, for example, the DAX is up about 120 points from where it was at 6 a.m. this morning, which gave me an early indication this market was going to be up today. I look at it every day, 6 o'clock in the morning, the DAX futures. Now, obviously, losing money is part of the game. But if you continually losing money, I tell you to stop trading. If you'll stop trading and say to yourself, okay, why did I lose? Like today, if you kept trying to short today's market, you probably went home a loser. And you should have said, well, why was I continually trying to short the market? Was the charts I was looking at, telling me the market was going to go down? I've been trading for 33 years. I haven't found a chart yet that tells you anything other than the historical play on that market. Learn to read the tape. But a great common sense approach is if you have a losing day, you probably ought to stop until you put your finger on why you lost. Now, the market's open 24 hours a day. Now, we just finished a great big day today. The Dow surged. Everything was going good. But guess what? Starting at 5 o'clock, this cycle starts over again, and we go through Asia, we go through Europe, we go through the U.S. That's early U.S., New York, and then we go through the U.S. late, which is California. So learn these times and learn these distinct markets during the course of a day. I tell people this all the time. Don't worry about the direction this baby's going to go. Just go with it. Today was very simple. If you had bought anything prior to 2:30 this afternoon, you made money today. The market was in an uptrend today. Check it out. Say to yourself, hey, what if I bought FedEx this morning? Would I have made money? It opened at 138, closed at 141. Answer, yes. News. And the news this week is going to be important. That comes out on Friday. It's called non-farm payroll. Pay attention because that can change the trend of the market. That's a big news item coming out Friday of this week. Economic data is also important. You see the manufacturing data come out and people were surprised. That gave a boost to the current trend. Every Wednesday, tomorrow's Wednesday, there will be a crude oil report. There's been a lot of talk about all the inventory out there, about all the rig count coming down and all that. But then you look at the crude market, and the crude market went down and has been sort of rallying the last few days. If crude takes out $34.50 a barrel tomorrow, you're probably going to see it go higher. And that's just a key pivot number I'm looking at going into that news tomorrow. Now, I told people about this one. I learned this one from oil men. The last day of the month is typically a negative close on crude. Look for that. The reason is that's how they cut their production checks, not on an average, but on that last day of the month. Now, the Model T trade is a trade I designed that was good to use after a Fed meeting. There's 8 Fed meetings a year, and after the Fed meeting, there's a great 48-hour trade there, and we call it the Model T here at DTI. Now, this is going to play into this year, isn't it? The night of the presidential election. We always have an election party at DTI. I promise you, the way this election is going this year between the Republicans and Democrats, there's going to be a lot of fireworks on this night, so put it on your calendar. It'll be the first Tuesday in November at 7 o'clock. We'll have a great election party here on the web, right in our Omnovia room. The day after Thanksgiving tends to have one of the largest percentage up days of the year. That doesn't mean you can get up and buy the market. What it does mean, though, to know that's out there and you look for that kind of setup. What I found, you had to get up early to take advantage of it. Always continue to learn. You know, I looked at the market today and I looked at everything that I traded. I had one of the biggest days of the year today because I was long, okay? And I'm looking at the market. I'm saying to myself, okay, how much higher will it go? Well, I'll start out when Asia opens tonight and build tomorrow's forecast. The week of December 26th to January 1st, I consider the best trading week of the year. Most people will tell you they're taking off and going on vacation. I used to do that too. But then I figured out the trends were pure. And what I mean by that is you get a trade on the first couple days of that week and have a whole year's worth of profits that 1 week there because it's good trends on that week. Just keep that in the back of your mind if you're around. Now, when overall market prices have risen 2.5% during any session, do not go short. Does anybody know how much the S&P rose today? What was the percent of gain of the S&P today? Anybody know? It was right at 2.5%. Therefore, I expected from 230 to 3 it would come up. It did. Now, that's generally a sign that you're going to have further strength in the month of March. Keep that in the back of your mind. Always look at where you get in and where you're going. And remember, the stock that you own, you can't fall in love with it. If it's not performing, not paying you, get rid of it. And I always have a lot of fun with people when I propose. I say, you tell me you want to be a trader. You tell me you want to do this. Now, keep in mind, I've been doing this a long time. And I always say to them, make up your mind. Make a decision. Are you willing to do what you need to do to learn how to do that? Because the key from me to you or me to anybody else is the knowledge. Knowledge reduces your emotional problems in trading. Knowledge adds to your account. Knowledge helps you see the high probability trades. Knowledge is the key. This is an old test. You've got a stock moving up, or you got a market moving up like today, and you check your portfolio and your stock went down, you probably ought to get out. You probably got a bad stock. Now, you found this out in the early parts of January. All those high flyers, your Netflix, your Apple, your Amazon, they fell the fastest in that downtrending market. Keep that in mind. Always take your losses quicker than you do your profits. Now, I'm along the SPY. Are y'all familiar with the SPY? The SPY is S&P 500. It's an ETF. I'm long the SPY. I had a chance today to take plenty of profits in the SPY. I ended up taking a few, but I'm still long a lot because I expect to see higher prices. I'll use stops on every position I have because one thing a stop does for me, it breaks the hypnotized view I get when I'm making a lot of money. The stop will wake me up. Here's one I always get. You've heard this. You don't go broke taking profits. That's exactly how you go broke, taking small profits versus the risk you're taking. If you paid your money, see the whole picture show. See what the ending is. Always know where you're going to get out, whether it's good or bad, on any position you take. These insights are designed as a common sense approach, regardless of your experience level, to give you ideas about how to be around long enough to figure out how to make money. Think in terms of percentages and the amount of risk you take. There's a website out there. It's called, and we're in the election season, I'll share this with you. It's called predictit.org. You can check it out. But if you look at the different elections that are going on tonight, Super Tuesday, and you go in there and you spread around your money, okay, odds are, okay, one of those elections won't take you out, but the combination of the trend should pay you. Give you an example, I've used the same techniques that I used to trade the stock market on that website. I started out with amount of money, and I just checked my balance. I'm up 30% inside of 30 days because I'm using those same techniques. I'm not risking too much on any one election. You can apply the appropriate strategies to any market you trade. Elections, just want to check it out. That Predictit is a pretty fun website. Learn how to win from your losing trades. So if you've got a stock that's going down, chances are, if it's not an outlier, that whole sector is going down. With electronic trading, it's easy to overtrade. I always encourage people to think about each trade, slow down. The market's going to be here tomorrow. BJ, it's called predictit.org. Predictit.org. What I like to do, and it's just like the financial news, I like to go to that website when I hear things on TV. I go to that website and see really where the money says it's going to, it's going to happen. For example, if you go check Louisiana out right now, they got a 94% probability that Trump will win Louisiana. But go check it out. You check all the states, then check out what people are saying. And some days it's just better not to trade. Just stay away from this game of trading. You've had those days. I've had those days. You know about those days. But the smart trader, staying out sometimes a good trade. Staying out. Now, anybody got any questions about the insights? Any at all? Again, if you would like a copy of those insights, send me an email at tbuz55@gmail.com. Now, if you want to find out more about our company and take a trial with us, I put together a toolkit for you. It's about the global markets, and it's videos about how to understand the global markets, techniques I use to buy and sell stocks, the DAX itself, why it's important, a way I determine short-term trends. I call it the 7-11 rule. 7-11 rule. And it's really a real handy little trick that I developed that you can watch the trends develop on the 7-11 rule. And we got a tape that teaches you that. We got the 401k acknowledgement about what to do with retirement accounts. And I've got 10 special insights that are designed to make you money in 2016. 10 trading insights that are designed to make you money in 2016. The toolkit, we priced it at 37 bucks, but you can click that link and you'll get our ebook along with the toolkit, all for that $37. So take it out, check it out. There's a lot of value there, but you know, you might find something that we say that that tickles your feathers, and you might decide, hey, maybe I ought to learn a little bit more. Thank you again, CTU, for inviting me. Everybody have a great day, and see y'all on the other side of this market. Now, let me give you my opinion. With the day on the market, having this day, it really says that the market should rally the rest of March into the 1st of April, and then I would look in April for another downturn after the 1st of April to go back down and test the lows. We should go up, make new highs off this rally. That means in March, followed by a sell-off starting in April. That's sort of what I think is going to happen. For those that can picture what I just said, that might help you with a scenario to follow and make some money along with everybody that's following the DTI approach. Y'all have a great day.